Welcome to Wise Beyond Bitcoin, where you cover the crypto neo news, education, and opportunities. My name is Lucas.
My name is Ryan.
And we have some more news and education from which there will be opportunities for sure. But sometimes the best opportunity is knowing what to stay away from and to stay out of, especially in this market. We've been talking about blockchain and crypto for a couple of years. We go above and beyond any protocol. We look at the latest developments and innovations, whether it's Ethereum, IBC, layer zeros, ones, twos, proof of work, proof of stake, smart contracts, whatever it is, we're trying to research it, understand it better, and share that information with you. If you like this and know that it's not financial advice, marital advice, legal advice, commercial advice, it is just education, entertainment, information to help you in your crypto blockchain journey. Well, we got plenty of playlists, and subscribe, notification bell. We appreciate the love and support that keeps the desk lamps lit and the streams flowing. We do have DeFi tutorials real quick to walk you through. If you're learning just now, take your time. We're at the early stages of blockchain and crypto. Now is a great time to learn and get involved. We've got explainers to walk you through. We've got videos on specific blockchains and innovations, especially secret network with privacy, IBC. Also, how to download a wallet and just the basics, as well as one thing we'll be keeping a weekly update and what we love to stay on top of. And I think this news is more aligned to it. Our news, our weekly, our macro updates. We like to get into the nitty gritty of this in its grand scope in the market and the economy at large, right? Pretty much.
That's right. Yeah, we met in economics, the economics program at university all those years ago. So that's definitely a major layer to what we provide, looking at monetary policy and supply chain issues and unemployment, inflation, all the big things that factor into the macro picture and how they impact crypto and financial markets in general. So that's kind of our bread and butter, what we love to talk about. And
hopefully it brings some peace to your heart and mind. That's why we share this, because when you take a long macro look and picture, then a lot of these dumps in price, they don't really seem that irrational. And when you understand the leverage and how this gets built up, then recognizing the deleveraging and how it goes down, it's not so shocking. And
right,
with this knowledge, hopefully you can better protect yourself and prepare yourself for what's to come.
Exactly. Well, today, what are we talking about? Kind of a continuation of some issues that we talked about in a previous video regarding staked ETH and Celsius, as well as 3 Arrows Capital. Like, that story is continuing.
Yep.
Before we jump into that, we're just going to take a quick look at the markets, seeing that there's still some red, a little bit of green here and there, but largely the stable coins, yeah. But largely we're seeing continued pressure on prices, downward pressure, but not exclusively. There are some bright spots here and there, but so it's not a sell-off in an extreme sense. We're looking at what, like kind of some sideways action, would you say?
So, some sideways action. There's also the bounce back from the Fed news, where everyone was expecting the 75 basis points. They got the 75 basis points. The market kind of went up and then down and kind of seemed to settle, as we would see in the traditional market. So as we point out all the time, the crypto market is definitely trailing and following and highly correlated with what's going on in the traditional market. But like you said, we just did a video on 3 Arrows Capital and Celsius, and why is it good to understand how these DeFi calls, these exchanges are connected and how they actually leverage each other, is because if there is a weakness or a failure in a protocol, then you'll see how they will also unwind, delever and bring each other down. So this is kind of a follow-up in the video we just did, but this is an example of how it's rippling out, and it's going to cause a liquidity crunch, or it's definitely going to affect decisions in DeFi outside of just Celsius and the staked ETH. So that's basically what's happening here with Maker and DAI. That's talking about stable coins. That's one of the OG, more decentralized blockchain stable coins that exist.
Yes. Basically, it's kind of one of the major decentralized stablecoins in the Ethereum space, right? In the EVM world.
Backed by the collateral of ETH.
Yes. So what's the big news? Maker has decided to cut off Aave from its direct deposit module, which is a way to generate DAI. So the way this works is you can post collateral on Aave, and then through this facility, you can take out a loan in DAI, and in doing so, the protocol has generated some DAI for that loan. So one of the problems with this facility is that Celsius had deposited staked ether as a collateral and borrowed, I believe, 100 million in DAI. And the problem from Maker's point of view is that if Celsius were to be liquidated because of their mismatch in the liquidity problems, but also the mismatch between assets and their liabilities, if they were forced to liquidate their staked ETH, it would definitely bring staked ETH even further below peg, and then Maker would be running the risk of not being able to retrieve all the DAI that Celsius had borrowed. So we're looking at a collateral, basically a collateral write down, which would put Maker in a position of having to write off some of that loan. So this is just another part of the story of what happens when liquidity starts to get crunched, and then that, like you said earlier, these platforms are leveraging each other, and when that liquidity crunch happens and prices get put under pressure, collateral gets reduced, and then the leverage turns into a deleveraging, right? Leveraging gives way to deleveraging, and Maker obviously sees this risk and is looking to take steps to mitigate their exposure.
Well said, brother. One of the things that's good to note about DeFi and blockchain and crypto, because of blockchain analytics, because of how quickly information spreads. I mean, we live not just internet, but in this new world, information spreads so fast, it allows for people to respond and act in ways that traditional financial models, that in the past, the way information was spread and how long it would take certain boards or certain decisions to be made. It's one of the benefits to see is how DAOs are functioning properly and working. You're seeing some of these DAOs come together and adapt and overcome and make decisions based upon current market conditions, so that they can shore up, be secure, and protect the protocol so that it moves forward. So it's nice to see DAOs working even in times when other aspects of the market are breaking down.
That's right. Yeah, the resilience in the decentralized autonomous structure. It's nimble, and we're seeing a lot of these protocols taking steps immediately to limit their risks, right?
Absolutely. So that's the big news. This is nothing bad when it comes to MakerDAO and DAI. It's actually, I would say it's good news when it comes to protocol. When it comes to DeFi, I see that this is obviously going to shrink liquidity. And anytime you have less access to leverage and loans, that's less money going back into the ecosystem. So definitely negative impact on prices at large. But if you've been following our channel and our macro outlooks and the world at large, I would say that the pressure for prices to go down have little to do with DAI limiting how much can be
right
at the moment.
Yeah, that's like a ripple in an otherwise sea of effects, right? It's the very minimal. Right. It's more about the Fed and the interest rates and the loss of liquidity. As the Fed constricts credit, constricts money, then the liquidity in the system dries up. And we know that there's been a lot of venture capitalist money flowing into crypto, Wall Street money flowing into crypto. So as Wall Street and venture capitalists see their lines of credit diminished, then you should expect the money flowing in to flow right out again, right? as that process, as we, as markets breathe essentially, and we're just going to have to watch it happen. There's not a lot you can do about it, but it is an opportunity for those who are, who have a long-term vision and can see the value in the space. There's definitely an argument to be made that we're near or nearing a potential bottom in the either now or in the next few months. So yeah, there's a lot of opportunity, but I do believe that there's still a lot of leverage in the system, right? We're kind of at the beginning of a deleveraging. So I don't think that we're done. And this is not financial advice. We're not traders and we're not analysts in the sense of in the business of predicting prices. But just from a macro perspective, it does feel like there's still a lot of slack in the system. There's low valuations can definitely go lower from here, even if it seems to be a sideways movement. It only takes one of these big firms like Celsius or Three Arrows to liquidate for there to be another leg down.
And we're talking about the whole global market cap of cryptocurrency is now below $1 trillion. And this is not even, it's a flea. It's not even the tail of a dog when it comes to the financial system at large. And when we talk about 2024 rate hikes going for another year and a half, we could easily be looking at a year, 2, 3, or many years of sideways movement and corrections. However, beautiful thing is this is where the best opportunities are before the next bull market, whenever it hits. This is when the heliums that are building a blockchain lo-fi solution, or dApps on Ethereum, or what's being built, the smart contracts leveraged on Bitcoin now. I say leverage,
right? Or Polkadot or Polygon that are also building out awesome infrastructure.
Yeah, this is when you find out those projects and protocols that are actually worth something, that are hiring new developers and building applications of value. So if you like to stay abreast of the developments and stay on top of these things and kind of put what's happening in the market perspective, you know what to do. Find those addresses below and send a little donation of love. No, hit the subscription, all that good stuff, like all that, comment if you know of something that you think would be of interest to us to check out. And until the next time, have a beautiful day. Namaste, y'all.
Adios.